Yesterday was a no trade day for me yesterday. I didn't I looked at the market. I think it was market open. And then that was basically it. I wasn't really able to be around it all that much after that. So didn't even get tempted to take any trades at any point. So then today I will though. But yesterday this is where we were at during the live room yesterday. And I talked about I thought it would be bearish. We were not bearish. I mean, it kind of went sideways mainly most of the day. Market open, we did drop, and then we ended up snapping back up after that. And then later in the day, it was just crazy move. Look at the NQ. NQ had this huge drop at market open. And this is what I saw. And I was like, hey, look at that. I thought we'd play around the median, and then we never came back to the median. But initially, bearish felt right, especially at market open. But the markets just keep crushing higher. Good morning, Kyle. Which is good. You got the dollar. It has gapped down through and opened up basically right at that mean threshold, consecutive encroachment, area that I wrote out yesterday. In the with this fair value gap as well. And we slammed down, but it looks like we're trying to grab our feet some, come back a little bit. So we'll see. We'll see if the dollar can keep moving back up. Ever since we broke that trend and just kept dropping, grabbing all that liquidity below it. So we could obviously come on back down into here. Maybe eventually this is where the overall target's going to be as it keeps falling, as the days keep going. But I would expect some type of pullback, consolidation, then another drop. So maybe we can expect something here. We got a nice gap to come back up and fill. We fill that gap, play around the daily, and then continue. Might see an update today in the dollar, or at least an up morning. Let's back out here on a higher time frame. Yeah, ever since we held this area right here, it just didn't want to break down. Come down basically to the top of this order block, this breaker, if you want to call it, if that's where you want to go with. We held all this area, this structure on a lower time frame. I think this is an hourly fair value gap. We definitely didn't close below it, and we just bounced right off of it. So we already started bullish today. So we've got some buy side liquidity that we can start looking into a couple of days ago. And just see if we continue to be bullish. This is on the NQ. Drop into a 4 hour. Let me get these lines off here. It's too much. I'll leave the 21. So 4 hour chart. getting up here to these lines here. We got the monthly where it opened up here. One thing that I'm noticing just in looking at this chart is we do have a pretty good straight line here, but also that's the wrong line. Yeah, I am. I have been. And the reason being is momentum. Um, I have found that I like the in and out, the quick in and outs. You can get, a quick 10 points to 20 points on the NQ a lot faster than the ES gets its 5 points. Um, the swings are a little more wild, so there's more of a not a hesitation, but there's more patience in my entry. So you know, say right here, it's basically me just hitting the market button immediately when it breaks. There's no um, the only thing that I do get drawn into that's a negative is the fact that I get to watching candle by candle instead of zooming out some, because I'm just looking for this quick move. And this move would have been from basically right here at 83, 183, and I would have been looking for 203. So that little bit of a small move. So that's 6 minutes. And pretty much it's just like as soon as, yeah, like as soon as this next candle starts kind of getting above into here, I may go ahead and take the trade. Like just go ahead and mark it in as soon as the next candle comes up and starts forming, and then bam, take the trade, and then quick in and out. But there are times when I take some heavy hits because with the NQ, sometimes you have to give it room because maybe I'll take that trade right there and then it'll just consolidate and then end up dropping down, into here. And that's a pretty big move the opposite direction. So there's sometimes when I'll take some pretty heavy hits. I think one morning, uh, remember which one it was. Uh, I got in and the next candle wicked down to my stop and stopped me out. It was like an immediate $1,100 loss, like 3 contracts. And that's kind of a rude awakening. Like when you, and the trade was like 3 seconds. So when I went and just clicked the buy button, as soon as it started to break, like it whipsawed down and back up. And it was like, oh, there's nothing you can do about it. There's no time to do anything about it. And it wasn't that my stop was in the wrong place or that, it was just one of those quick, nasty snaps that tends to happen with the NQ. And that's kind of the drawdown, the drawback. Because, I mean, after that, I really didn't want to trade much after that. But even though, like back to this, so even though I still have, I mean, I see this kind of box area that kind of throws this straight line a little off. Um, there's a pretty good straight line right there that price should come back into a lot like it did yesterday. At market open. So a lot like it did yesterday at market open when it dipped all the way down into here and then snapped up. So, but this on a higher time frame, so this pullback should be a little bit harder, a little bit further. And with the dollar, which I know they haven't really been in tandem with one another, this has been going lower. The markets have been grinding higher instead of just kind of going higher pretty quickly. If the dollar tries to find its feet at some point, then NASDAQ and ES should drop. However, we got CPI today. So everything that I'm saying probably doesn't matter. CBI at 7:30. Buy your accounts, YOLO the trades. That is not advice. Yeah, if you are doing really well in your accounts, I suggest not even trading it. The numbers are supposed to be good. They're projecting decent numbers month over month. Good for the dollar year over year. It's going to be down, but as long as they hit those projections decently and a good, if it's above those projections, then I think that, yeah, I think if it hits those projections or gives some type of green number and it's hawkish, then I think the dollar recovers some and the markets will drop pretty harsh just because they've moved so much. This is a large uptrend. I'm kind of basing out here so we can see a little bit of a pullback. I don't know if we get down here type of pullback by any means, but we could see, somewhat of a pullback with news like that. Tomorrow we got PPI, and then Friday consumer sentiment. So one thing to look at is the dollar CAD today at 10 a.m. I mean, if you got a way to trade forex. So Canadian dollars coming out with their bank rate, and they're raising it a quarter. So that's going to be CAD strong. And as you can see, Canadian dollar has been crushing down. And wow, we've got this line down here. It's been there for a pretty good while. Could be an area kind of look for. If the dollar gains some ground early this morning and then the CAD rate comes out, that's what you would want to see. With the CPI coming out, I would want to see the dollar back up into this area. And then when the cash rate comes out for the Canadian dollar at 5%, wait for that initial push. And then hopefully it doesn't just snap all the way down here. And it gives, some type of entry around these lows to go lower. Or you can get into a mini lot trade as it comes back up right before the cash rate and have your stop kind of way up here. And then as it does drop, you can add to that. And then if it comes up and snaps you out, you're just taking like kind of a normal loss. But I definitely look to see price is kind of dumping, taking out that liquidity down here. Overall sell side will be down here. Might wick into this area, but it all really hinges on, does the dollar pull back early this morning? The dollar keeps dropping, then you can see this come on down. And I don't think it's this. If the dollar keeps dropping and the CAD keeps getting stronger into the CAD news, I don't like this as a trade. I'd want to see the pullback first for the drop. Euro CAD looks good too. Mainly because we've already taken out some liquidity. We're in a premium zone of kind of the last move. You get more bang for your buck, even though the spread's a lot larger for on the Euro CAD. But that might be a pretty good little look too, just because. But I wouldn't want to see an initial drop. I'd want to see this kind of pull back and then slam down, taking out that liquidity right in here, targeting that structure. I'm actually going to put a line on that structure. Trying to get too many lines on the chart, but I'm going to put this one up here. This kind of coincides with a little bit of this liquidity over here, which is also right there. Oh, sorry. I just I just don't see any way that this keeps grinding and then takes off. This has got to pull back, even something like that. But I would think a little bit deeper of a pullback. And with the news today, we might get it. So I'd really, really be careful and pay attention to 7:30, 8:30 Eastern, when CPI comes out. That's where I would see that might set us up for what's going to happen at market open. So let's look at the ES. See, it's such a different chart. Oh. So same consolidation. The only difference, obviously, is taking out highs. We haven't gotten there yet. We're both well above the Monday range. Yeah. Yeah, I think we get it today just because of news. I mean, I think it recovers, but I think we get a pretty good snap down because of news. Although I do like the fact that this buy side hasn't been touched on the ES. That's where that's at, right here. So this area is this area on the NQ, and the NQ took out that liquidity. And now the NQ is the weaker one here. We haven't gotten there yet. So we grind a little bit higher into that buy side liquidity there, and then into 730. We might see the Monday low today. And that would be a good shallow for y'all. These old highs. And I think that would get the NQ above that guy. It doesn't have to come up here yet. Most of that liquidity is resting right here. So we grind up above that. That's just like the NQ getting above, I mean, the ES getting above that. And we're basically in tandem, just at different, obviously at a different level, but reason to take that liquidity lower. I think the Dow looks a lot like the ES. Yeah. Where it hasn't taken out that high yet. The difference there is that it has gone a lot lower. Why is that kind of foggy? Yeah. Let's go back to one and then really dive into the ES real quick. Take that line off. I'm gonna take this. Yeah, I think I'm gonna take this line off too. What about down here? I think I'm gonna leave that line. I like where it's at right there. I might stretch it out just a little bit. I'm definitely gonna leave this line. And then I'm probably gonna add one. No, I'm gonna leave that one alone. If for some reason we get a nice push to the upside, this I might put a line on that one. But I wanted to get away from it real quick. This might actually be a good one. Maybe I'll put a line right there. Kind of right in that fair value gap. It's probably going to be some type of breaker now. Yeah. Kind of the top of that breaker. Coincides with that 4 hour fair value gap too. So that's a pretty good spot. Drop into a 15. Monday high looks pretty good because of this guy. What's that? This line. Take it off. I think that was that monthly, right? Because I think I've searched for that the last couple of times we've been on. Drop into that 15-minute again. Yeah, this could get a push on up a little bit and then drop down. This could be first target. It's right at the Monday high. In fact, because it's at the Monday high, I'm going to take it off. And that was yesterday's open. So, well, because we're at the Monday high, I'm going to take it off. That blue line will be fine. So come up here to indicators, Kyle, and then moving average exponential. It's a general indicator from TradingView. Click on that, and then it'll be in that box up here, and then it'll come out, and this will be 9, and the color will be blue. So that's exactly what that line will look like when you get it on your chart. So just go up into the settings. I always change mine to red, and then just move that to 21. There you go. Oh yeah, this is the only other thing. So this is smoothing SMA. It comes out SMA. I always change that to EMA, and it doesn't really change much. It gets it a little bit closer. Smooth the smooth moving average. Depend like if you change this number quite a bit, you'd see these little pushes that go up. They wouldn't be as drastic. That's what smoothing that out is. I always change it to EMA because I want it to give me as close to price as possible. And then I just like the look of the VWAP when we get it on there, because if you come back down to open, yesterday we had that cross right there, right? And this is when we were in the room. And I mentioned I would like to see it. I thought it was going to be bearish. I thought it looked bearish. I thought, I even said like, well, it could come back up for the highs. So, but everything's kind of looking pretty bearish. And we did get that push down. We just didn't get it like I thought we would. And if you look at the moving averages, this is when I was saying that crossing, we get a push off of the lines, and then it drops down through them. The lines never really cross again. They stay that way. Get that rejection back up. So on a lower time frame, come in here, look at market open. Market open, a little pop, and then a drop down. As soon as we break back above here, if you had taken a trade as we break back above those lines and the 21 is above the VWAP, it never comes back down. But again, it's one of those things that it just keeps me a little more patient. And the 21 by itself is fine. It just keeps me a little more patient. Don't rely completely on it. But if you see your setup happening and the 21 EMA, like, this is basically my setup, right? So we got a little bit of consolidation. We've taken out liquidity. We've dropped into some stops. coincides right there with this nice little guy. And then we immediately push up. So that's my setup, right? It bounces off the EMA and comes down and then immediately rejects it again. I'm entering right there. Or right here. But definitely when it breaks that 21, I'm entering. And if not, we get the structure break here because of this. And then it comes back to the 21. This is where I'm entering. Hang on a second. Sorry about that. And then some people, when they utilize the so many 21 EMAs, which one? The one that I use literally just says moving average exponential. So if you type it up here, that's the only one you need to get. And then, like I said, let me take this off. When you click on moving average, it'll pop up right there. EMA 9, close 0, SMA 5. That's when you go in and you just change it to 21. And don't use any of the ones that have been like messed with. Because if you go into like EMA, you'll have all of these different ones. And if you type in 21 EMA, it's a very popular one. You'll get all of these different ones, Fibonacci's, EMA 2113, scalping, and all this kind of stuff. Don't mess with any of that stuff unless you just want to have a weekend of playing around on back testing. There's no reason to mess with any of this stuff. Yeah, you just need to, if you're wanting to use it kind of like I've got it on my chart, then it's just the moving average exponential and then change it to 21. And that just gives you a normal moving average. And it does really well in the higher time frames as well. But honestly, if you threw up, I think Jeremy and them did one, Newsom and them over at RLT. Like they did, like one day, they created like a strategy based off of it, and they just went in there and typed in like 108. And like every time it broke above the 108 EMA, like they would just buy. And as you can see, even if you take off the 21, it does respect it in a lot of ways. Right? It's not perfect, but none of these are. It respects it in a lot of ways. So it really doesn't matter. It's just something like that you can, depending on the time frame you trade on and, you know, what you're comfortable looking at. I would definitely, especially starting out, one, you can forward trade it if you want to. Um, I would use micros, one contract, um, or I would back test it and get used to seeing price react around it. And once I got used to seeing price react with it, then I would, utilize it in my trading. Did you set up your trade copier? Have you looked into that? Because I think even with the trade copier, you can set up your trades to where, certain accounts can take bigger trades. Like if you have an account that's, obviously well away from its stop loss, that one can trade at two contracts. And then you got one that's, just starting out or whatever, you can trade it at 5 micros. But the execution is just, when you push the button. Now, I don't know how to set that up. I've never used them. So but I know that you can. I do plan on getting a Top Step 50K account before that sale is up on the 16th. I don't know if y'all know this, but Apex is at 80% off through the end of the month. So I know, right? That's just their normal price, and they just need to come out and just say these are normal prices. But clearly, it doesn't sound as good. It does not sound as good as 80% off. 80% off for life. I was Top Step right now. They only have 3 accounts, and it's a 50K, a 100K, and a 150K. 150K. And here, I'll pull it up right there. So 50 a month, 100 a month, 150 a month until I think it's July 16th. So Sunday, I think it is. And they do limit. Wow, this used to be 3 contracts. Now it's 5. Um, their 50K account, Apex's 50K account, you have a 2,500 stop loss, where this one you only have 2,000. But you get an extra no. Apex, you get 10 contracts on the 50K. So yeah, you're limited there. But it's their things now is, they're having one step, one rule, just like everybody else. And then that's the new one right there. And then let's see. Yeah, that really surprised me. The rules thing. They used to not let you trade during all news, period. Like especially the big news. I think it was like you had to wait 5 minutes or 10 minutes. Like they made you wait pretty good. As far as Apex being better than Top Step, I don't think so. I mean, all these prop firms, listen, if you get paid from a prop firm, they're just all is the same. Execution is the same. They both use Tradeovate, um, and NinjaTrader. So it's the same platforms. It's just a matter of, you know, which one you want to go with. Like that's really it. Um, I think I haven't traded with Top Step in quite a few years, a couple of years now. So I'm less familiar with how their structure is as far as when you get funded. And I do know now that you can get funded in 4 days. You can take a payout. The things that I think that Top Step did right now is that you can take a pay if you have 5 days of a 200 plus winning days, you can go ahead and take a payout. Whereas with Apex, your first payout is like 10 days, period. Where, if you've been profitable for 5 days, trade and Top Step $200 at a time, you can take a payout. Now they do have that 30% rule, where you can't be making $250 a day and then make $1,400 in one day, and then try and take a payout. Like you have to stay within the 30% rule. It's very complicated to get into something like that and talk about it. I think some of that stuff is kind of stupid, but they want you to be consistent. They don't want you to, um, they want you to make as much money as possible, obviously, but they don't want you to, you know, trade micros, make $100 a day, and then one day go to the ES and E mini and make $1,500, $2,000 in that day, because it was almost like you were just YOLOing it or whatever. So they don't want you to do that. They want you to be as consistent as possible. So, but once you, let's say, after 5 days of 200 plus trades, you can take a 50% of your account payout. So let's say you've got a 50K account and you've gotten it to $3,000. They'll let you take, and say you're profitable 3 grand. You can take $1,500. After 30 days of 200 plus, and it don't have to be consecutive. Like you can, it can take you 45 days to get 30 days of $200 plus a day trading. You can take 100% profit and basically just burn the account. Um, but I wouldn't suggest that. And then you can get a payout through Top Step weekly, whereas Apex it's biweekly. So, I mean, is one better than the other? I personally don't think so, because, like I said, if you're getting paid and you're not getting like bad, your broker's not messing up or anything like that, then they're all the same to me. Like these are pretty good prices for them. I don't know if they'll keep them down here. Obviously, I don't think they will, but that's the reason why I'm probably gonna get this guy um, before Sunday and just set it up on my Tradeovate. I'm gonna trade it on my tablet. Um, I don't know. I might set it up on the computer. I do have a Tradeovate. Um, I do have Tradeovate on my desktop. I just hadn't used it in a while. But I do think all the changes that they made were positive for them as a company. But again, is one better than the other? I don't think so. I mean, there'll be people that talk crap about this one and that one all the time. So I'm gonna put this in. Now, Apex doesn't restrict you as far as like, I don't think they have much of a consistency. I don't know if they have a consistency one. I've never been stopped from getting money from them based on consistency. So, I mean, if there's a plus, I guess Apex has a plus there. But ooh, we're going to see this push back down into the daily price line. I'm not too convinced. I'd be embarrassing this um, until we hit some good liquidity up in here. Because we could just get something like this where it drops down and then immediately pushes back up and then grinds higher. Like, like I don't want to get caught in just a grind higher, tagging along, because that's just going to be nerve wracking and whatever. And I don't trust it going down just yet. So the NQ is doing on the 5 minute. Oh, we're back at this trend line. Yeah, that grind, man. I just some people are okay with that. I don't like to manage trades that long because I get to overthinking and overanalyzing, moving stops where they probably don't need to be, or not moving stops where they should be. Giving back too much profit, things like that. It's too many things go wrong. I'm still struggling with trades that I get in and they don't immediate react in the way that I need them to, and then just kind of hanging on to them and letting them grind me out or push down and get me out. Um, Usually, if I'm getting in a trade, I'm getting in a trade like this, where when I buy it within a couple of candles, it needs to be up here. And if it's not, then I should be getting out of the trade, win, lose, or draw. Like small win, small loss, break even. I just need to get out of it and wait for the next setup. Watch the break of this trend line. We get a nice displacement, break through that trend line below this fair value gap. I want it to be below that. If it breaks down, I want to see it displace and close below this fair value gap. And then one candle, maybe two candles before it drops down to this daily price line. If it grinds right here, consolidates, then it's a no trade. Even though it looks like a bear flag and it's going to drop again, I don't want to do that. I think that has more potential to come back up. I want it to displace, give me one, maybe two small candles that don't come back up into here and then drop. Then I would believe that we've got a short that we can be a part of. Yeah, there you go. That's another reason. Like, see review app sitting right in the center part of that fair value gap. So yeah, I want to see a close below that. All right. I don't know. Y'all want me to look at something else, or um, possibly just go ahead and call it a day? Wow, that's been there for a minute. And then see you all tomorrow. Yeah, no problem. If you got any more questions about that 21 EMA or anything like that, Kyle, just feel free to throw them in the chat, and we'll talk it out. Hey, be good, Chris. Appreciate you, man. Y'all have a good day. Be safe, and I'll see y'all tomorrow.